You're listening to The RealWealth Show with Kathy Fettke, the real estate investor's resource.
Gold prices are soaring, and that is no surprise for today's guest. In fact, he's been criticizing the Federal Reserve's printing of massive amounts of money for years, as he knows it is devaluing the dollar and increasing the value of gold. So let's find out what he has to say about gold and real estate today. I'm Kathy Fettke, and welcome to the RealWealth Show. Our guest is Peter Schiff, and he's chairman of SchiffGold, CEO and chief global strategist of Euro-Pacific Capital, and host of the Peter Schiff Show. He is an economic forecaster and investment advisor influenced by free market Austrian School of Economics. And he's one of the few forecasters who accurately and publicly predicted the 2007 housing market collapse. And let me warn you, he's here to tell us that he sees another collapse coming. Now, I don't necessarily agree with everything Peter Schiff says, but I do agree with a lot of it. Rich and I have bought gold, and we believe that it's really good to have about 10% of your portfolio in gold, but gold doesn't cash flow. And real estate is a great asset as well that increases in value as the dollar decreases. So that's why we still believe that affordable real estate in emerging markets is a great asset class to be in. Peter Schiff challenges that, and that's what makes this a fun interview. So Peter Schiff, welcome to the RealWealth Show.
Oh, hi. Thanks for having me on your show.
Oh, boy. This is some of the things you've been predicting, and then maybe not. I don't know if anyone could have predicted this, but I think we knew a black swan might be coming. Didn't expect this one.
Yeah, I mean, my thesis never really included a pandemic, but you know, people are confusing the bubble for the pin, because the coronavirus happens to be the pin that really pricked the bubble. Although I think the air was coming out of it anyway, so you know, things were going to happen, but this accelerated the process. And what it's going to do is expose the vulnerabilities of the U.S. economy even faster. I mean, these vulnerabilities should have been obvious for years, but people were ignoring them. But you know, the problem is that we have this crisis now, and we have no savings to take care of it. I mean, so we're trying to bail everybody out. But there's no money to bail everybody out with. So the Federal Reserve is just creating trillions and trillions and trillions of dollars out of thin air. And just, it's going to be spent into circulation. And, you know, we're going to have a currency crisis. The dollar is going to collapse. Now, I know a lot of other countries are also printing money, so they're going to see an increase in inflation as well. But I don't think other countries are doing it to the extent that we are. And they're not starting from as vulnerable a position as we are. We have unprecedented amounts of debt already. Consumers, corporations, governments, both federal and local governments, loaded up with debt. And you know, our country, our whole economy is built on the foundation of the dollar being the reserve currency. And I think it's going to lose that status as a result of what we're doing. And that's going to mean that the collapse in the United States is going to be particularly harsh. So what people really need to be concerned about is not the coronavirus, although that could be, people should be worried about that too, but the government's cure is far more deadly than the disease itself as far as the economic damage that it's going to do.
So let's go back to what you said before, because a lot of people don't understand fundamentals. I think that has just gone out the window with a whole lot of other things. But let's go back to September. I think it started in September when there was these repos, and I kept asking, what is this? You know, if the economy is so robust and it's as good as everybody seems to think, what is this bailout? And what was the repo? You said that things were already starting to decline and that there was a global recession starting, but no one was talking about it. So what was that repo business back in the fall?
Well, that was the market was trying to move up interest rates because interest rates were held down too low, and the market was finally starting to rise as far as rates. And the Fed was worried that if rates kept rising, that the economy would implode because everybody had so much debt. And so in a desperate attempt to prevent the market from raising rates, the Fed entered the market in a big way and started printing money and buying up bonds, which is exactly what it did when it was officially doing quantitative easing. except the Fed denied that it was quantitative easing because it said that we're targeting short-term maturities as opposed to the longer-term maturities that we targeted in QE. But that was a distinction without a difference, and I pointed that out when it happened, that the Fed had already gone back to QE, which was one of my long-standing forecasts, because I knew that they would have to, because I knew that by withdrawing the stimulus, even not even completely withdrawing it, but even what they did was going to be enough, and that the air would stop coming out of the bubble, and they were trying to blow it back in. And so now when the coronavirus hit, we just opened up a gaping hole in that bubble, and it was no longer just a slow leak. And so now the Fed is just, doing QE like it's never done before. I mean, it's already done more than really it did in the first year or two of the financial crisis.
I just got off
a couple of weeks.
Yeah, it's very hard to know who to believe these days. It's really hard to understand it. I just got off a call with a bunch of real estate investors, probably many that from meetings that we've been to, and everybody's pretty excited, shall I say, about the government handouts. And as opposed to maybe what everybody needed to have, like you said, was plenty of reserves for any kind of hiccup, plenty of savings, versus, oh wow, I get to apply for a small business loan now, and I get possibly a forbearance on my mortgage, and my tenants may be able to get some relief. But how far can that go, these government handouts?
Well, the government doesn't have anything to hand out. Remember, it can't hand out what it doesn't first take. And so, everybody can't get bailed out. Somebody has to do the bailing. People forget that. And I know the politicians keep saying, well, nobody should have to pay the price because it's nobody's fault. Or after all, if you lost your job due to the coronavirus, that's not your fault. And that's true. And a lot of times when you lose your job, it's not your fault. I mean, sometimes it is. Sometimes you do a bad job and you get fired, but sometimes you do a really good job and you still lose your job for whatever reason, right? The company has a problem. But while I don't blame Americans for the virus, right? But you still have to blame Americans for not having savings. Now, a lot of that is because of the Fed and the government, but the bottom line is you're not supposed to live paycheck to paycheck. You're not supposed to assume that it's never going to rain and so never have a rainy day fund. So if it wasn't the coronavirus, maybe people would have lost their jobs for some other reason, but why do they have no money to fall back on? Why do people not have 6 months to a year's worth of spending money? Why don't they have the ability to pay their rent or pay their mortgage? Why do they have these big car loans? Why didn't they just buy cars that they could afford instead of borrowing money to buy cars they couldn't afford? Why did they charge all this stuff on credit cards? Why did they just pay cash for things? And if they didn't have the cash, well, then don't buy it. And same thing with corporations. You had all these corporations that now are going to get bailout money. But why do they need bailouts? Because they have so much debt. Well, why did they borrow all this money just to buy back their own overpriced stock? They should have kept that money in reserve so that in case something bad happened, they had a cushion. But, everybody's up on a high wire and nobody's got a net, right? And then they're, oh my God, look what happened when I fell. But, the government, I think, is responsible for the fact that nobody had a net because they kept interest rates so low. They enabled everybody to go so deeply into debt. And they punished people for saving money because there was no return on your savings. So you didn't get paid. I mean, if interest rates were at a normal level and companies had some savings, well, they would be earning interest on those savings too. They would have the interest to help them with the hard time. So the problem is you have this major event that's very disruptive to the economy, but it happens at a time where nobody has any savings. And everybody thinks, well, that's easy then. The Fed will just print money and everybody's going to be fine. Well, if you could do that, if the Fed could just print money and we didn't need taxes and it was all for free, then why don't we just do that all the time? I mean, why just wait till emergency? If all we have to do is print money, then let's just print money all the time and no one has to pay income taxes. No one has to pay payroll taxes. Everybody could just get all this government and it's all going to be paid for by the Fed.
And that seems to be the sentiment that I see with some economists that are like, this is just the new way of doing business. You just print money when you need it and you hand it out and it stimulates the economy and everything will be fine. I literally have been seeing reports like that.
Yeah, like people were a bunch of idiots 50 years ago, 100 years ago, paying taxes. Didn't they know they could have everything for free? That nobody had to pay for anything? That nobody had to save? That all we needed was a printing press? But, look, other countries have had printing presses, Argentina, Venezuela, Zimbabwe, Weimar Republic, Germany. I mean, why didn't it work there? If it's going to work so great here, why did other countries print so much money and then they had hyperinflation? I mean, how are we going to avoid the same fate when we're doing the exact same thing?
So who did survive economically speaking in those environments? I mean, what did people do who could see ahead and protect themselves?
Yeah, they got their money out of local assets. They got out of local currency. They got out of local bonds, out of local stocks, out of local real estate. They took shelter. And so that's what Americans need to do. I mean, that's what I'm helping my clients do is get rid of US dollars. I've been preparing for this for, over a decade, but getting out of US dollars, owning gold instead of cash, owning foreign stocks instead of domestic stocks that have, are better valuations, lower PEs, higher dividend yields, getting out of the US because the US is going to be the epicenter of this blast, and everybody whose portfolio is left in dollars is going to be a casualty.
What about affordable housing in the US?
Well, look, housing is going to have a tough time because Americans are going to be in a deep recession with a lot of unemployment. Now, sure, if the government just keeps sending checks to the unemployed, they can pay their rent for a while. But what's going to happen is as inflation runs through the economy, the cost of the property owner in maintaining his property is going to skyrocket, because the cost of everything is going to go way up. And I don't believe that they'll be able to pass on those costs to the tenants. But I also think what's going to happen is a lot of people are going to be in such dire straits that they're going to be, renting out rooms. People are going to have roommates. People are going to be moving in with their parents, or parents will be moving in with their kids. So I think there'll be a lot of property for rent, for sale, not a lot of people that can buy. And plus, if you have hyperinflation, what really goes up are the costs of food, the cost of energy. And so people go from spending like 5 or 10% of their income on food to spending half their income on food. And if it costs so much money to eat, well, you got to eat. So you don't have much left over for other things. And I think, one of the things that happens is when people don't have money for housing, because it's easier to downsize their housing, because people can consolidate by renting, all of a sudden everybody's house has got a room for rent in the attic. Then what does that do? You have to compete with all that. That supply is not on the market now. But when everybody's attic or, basement is for rent, now people have that to choose from. So I think that if you look at how hyperinflation has hit countries before, nothing in that country is spared. Now, I think the worst thing that you can own in hyperinflation is the currency, So the people who will lose more than the property owners are the people who loan money to the property owners. The people who hold the mortgages get wiped out because all they have is paper. At least the real estate owner has the property. But then you also have the responsibility of maintaining it. So sometimes it could cost more to maintain a property than it's actually worth as far as what you can rent it for.
So what countries are not playing this game? Where's the safe haven?
Well, they're all playing it to a degree. That is the problem. So I think all countries are going to have an inflation problem on their hands. It's just that in some countries, it's going to be much greater than others. But I don't think all countries are going to end up with hyperinflation. I think that's going to be reserved for the worst offenders, maybe the United States. But I think other countries, when really push comes to shove, they are going to fight the inflation before it gets that extreme by raising interest rates sufficiently and by backing their currencies with gold instead of dollars. But I think the United States, we're at a point where, politically and, realistically, we can't really raise interest rates because we have so much debt that the implosion that would result from higher rates is, no politician, no banker is going to do that. So other countries would be able to afford, or tolerate the medicine, right? They can swallow the medicine. I think our leaders are afraid that the medicine will kill us. So instead, we're just going to die from the disease.
Okay, so Harry Dent was on the show, and he thought that there would be a recovery this summer, And then after the election, then we would really feel the pain for a few years, but there would be a comeback. Do you have that? Do you have that same belief that we could go through a dark couple of years, but have a comeback and a restart?
I think we're going to go through a dark couple of years, and then it's going to get a lot darker. But we could eventually come back, but things are going to get a lot worse before they get better. They may appear like they're getting better as all this new money is created and spent into existence. In fact, if you look at this new stimulus bill, there are a lot of Americans who are going to make more money unemployed than they were making when they were working.
Right.
And so for those people, it's going to feel like a windfall.
Mm-hmm.
And they're going to have no incentive to return to work because you got 4 months of a paid vacation where you're getting paid more to take a vacation than you were earning when you had to work. And I think there's a good chance that when the 4 months is over, they're just going to extend that because it's going to get closer to an election. So I think there's a lot of people that are going to have a vacation until after the next election, and they're going to have more money and a lot of free time. So they're going to think everything is better. But there are going to be a lot of people that are going to be suffering. A lot of small businesses are going to go under, and maybe their employees aren't going to care because they're getting paid more, right, not to work. But eventually, when the effects of inflation are felt at the supermarket, right, when people realize, hey, I get all this money from the government, but I can't really buy anything from it with it, that's when the problem really starts to develop.
Well, people have been saying, I've been saying that since the last QE, that we were going to see massive inflation. And then we really didn't. If anything, I feel like we've been fighting deflation, just keeping ourselves above water with all of this debt.
Yeah, well, that's what the central bankers want you to think. I mean, we never had a year where prices went down. I mean, the CPI has been rising. Even the way the government measures it, it's rising a little more than 2% a year. So that's not deflation, that's inflation. But I think that the reason it wasn't much more than 2% a year is, one, because I don't think the official measures are actually picking up all the price hikes. I think prices are rising faster than what we're being told by the government. And I think that's by design. I mean, I don't think they're lying. I just think the way the CPI has been designed, the numbers are just low. I mean, I remember I did an easy survey myself back in 2013. I did a video of this. I went back to 2003. So I checked 10 years. And during that 10 years, according to the CPI, the price of newspapers and magazines was up by 30% over 10 years. Well, I checked about 20 newspapers and magazines, the most widely circulated in the country. And I looked at the prices in 2003 that were on the cover. And I looked at the prices in 2013. And the increase was about 130%, not 30%. So, I mean, somehow 130% gains went in and only 30% gains came out, right? So that's how the government manipulates these numbers. So I think the numbers were higher. But another thing that happened was the way the money kind of entered the economy, a lot of the inflation started out in asset prices. So we saw a big move up in stock prices and bond prices, real estate prices. And all of that was inflation. It was the result of inflation. It wasn't that companies were earning more money. It was just their stock prices were going up and the PEs were going up. And so it was inflation that showed up first in financial assets. So I think a lot of that inflation is now going to start migrating into consumer goods. But I think all this new inflation, especially the way it's being injected directly into the economy as opposed to through Wall Street, is going to have a more immediate impact on consumer prices than what we had before. So I think we're going to get a double whammy. We're going to get all the delayed effects of the inflation from the financial crisis on top of the additional effects of the inflation now. And what we're printing now is so much faster. I mean, this is much more money printing than what happened back then, right? The size of the stimulus bill and the bailouts dwarfs what we did in 2008.
And it's only really going to last a few months. I mean, they're going to have to do another one, right?
Well, yeah. In fact, by doing what they did, they guarantee they're going to have to do it again because it actually makes the situation worse. They are keeping companies in business that probably should have been better off failing, and they're paying people not to return to work, so they won't. And so what they're doing is going to perpetuate unemployment, and it's going to perpetuate the restructuring of businesses. And since the businesses that are getting bailed out, their debt's not going away, they're just going to have more debt. They're going to be in worse shape as a result of the bailouts than they would have been had we had a market-based restructuring, because what people forget, they keep saying, hey, we got to bail out these companies because we need them, right? We need the airlines, we need the hotels. Yes, but if we didn't bail them out, the hotels don't go anywhere. All these hotels are not going to disappear if we let, Marriott or Hilton go bankrupt. They don't just blow up the hotels, right? Somebody comes in and buys those hotels in the bankruptcy process. And during the bankruptcy process, the hotels are still operating, right? They're still there. You can't, the customers who stay at the hotels would not even know that the hotels were going through a bankruptcy if they went through a bankruptcy. There'd be no change. But what would happen is at the end of the process, the debt would be gone. And the new owners would have a clean balance sheet, and they would be more responsible, and they would do a better job of operating the companies. The same is true of the airlines. And because they didn't have all the debt, they could charge lower prices. But instead, we're propping up the current management that was reckless and irresponsible enough to lever up. Now we're going to give them even more debt to make sure that they can never cut prices. They have to raise prices even more because now they have even more debt to pay back. And so we would have more viable industries if we let the free market restructure them in bankruptcy, as opposed to the government bailing them out, entrenching all the problems, and then putting conditions on the bailouts, which they're going to do, which are going to make these industries even less efficient and less competitive in the future. So again, the strings on the bailouts guarantees that the companies are going to be in perpetual need of additional bailouts down the line.
Well, we know that we have a very powerful banking system, and maybe they just didn't want defaults.
Well, they would have lost, yes. Well, in bankruptcies, it's not only the equity owners that lose, but when you sell the assets, if you don't get enough money to pay off the bondholders in full, then they take a haircut too. Or the bondholders can just become the equity holders, and they can, hire management, and they can manage the businesses themselves. But a lot of times the banks don't want to do that. They don't want to run a hotel. So as soon as they foreclose, right? Just like if you're in real estate, right? If the bank forecloses on the property, generally the bank doesn't decide to operate the property and manage it. They'll just sell it for whatever they can get, right? But then the new owner buys the property in foreclosure. He pays cash. He has no mortgage now. He's the owner, and he can now operate the property. So I mean, that's what we need. But all this stuff about we need these bailouts. It's the investors who need the bailouts, not the consumers, and not even the workers. I think that employees would be better served if the company's restructured in bankruptcy, because if you get rid of the debt, that makes it easier to maintain your employees, and it keeps you more competitive. So that means that you can, have your jobs. But if you load up these companies with even more debt and you put these strings, eventually a lot of the people whose jobs are being saved today are going to be lost tomorrow.
So I only have a couple of minutes, but if this is the Titanic, what's the Life Raft?
Yeah, look, I've been the captain of the Life Raft for a while. And look, I mean, I invite people, this is what people need to do. First, if you don't own any physical gold and silver, buy yourself some physical gold and silver to have, you should have maybe 5 to 10% of your portfolio should be in physical gold and silver. That's the liquidity in your portfolio. That's like real money, as opposed to the funny money. But if you have a portfolio of stocks, sell these U.S. stocks. I mean, even though they're down, 20, 30%, or maybe a little more in some cases from the highs, they're still expensive. They were really overvalued, and now they're less overvalued, but they're still expensive. Get rid of them, right? Foreign stocks have gone down the same as U.S. stocks, right? But they went down from a much lower valuation. So they went from being fairly valued to being really cheap. So there's a lot of great bargains right now around the world. I mean, we're buying great companies with really good dividends that pay dividends in currencies that are going to retain a lot more of their value than the dollar, countries that are much better positioned to come out of this stronger than the United States. I mean, the United States is particularly vulnerable. I think, again, we're going to lose the privilege of issuing the reserve currency. And with that, our entire standard of living is going to implode. Gold stocks, I think, for those who want to speculate, I can't think of a better speculation than these mining stocks that have actually gone down as much, if not more, than the market. Excuse me, even though gold has actually gone up. and I believe it's barely begun to rise. I think it's going so much higher. So these stocks, I think, are incredible buys for people, who are looking for, hey, what can go up 10 times, 20 times, 50 times? I think some of these gold stocks will do that. I mean, of course, you're obviously taking risk, but I think the upside potential is worth it.
All right. It was such a pleasure to have you, kind of. Not really, very depressing, but great information. Thank you.
Okay.
All right. Take care. And thank you for joining me here on the Real Wealth Show. You can listen to this and any past episodes at realwealthshow.com. And when you're there, you can get a lot of information on different metros in the U.S. where there's migration growth, job growth, and a lot of infrastructure growth, and yet affordable real estate. So we think that's an opportunity to cash flow today and also enjoy appreciation in the future as the dollar continues to devalue and the value of assets increases. So again, you can check that out at realwealthshow.com.